So a saying I live by, because it stung me so many times early on, is poor people pay twice. I was always looking for the cheapest way to get what I wanted.
Yeah.
And I paid a cheap buyer's agent to give me terrible advice, and I got what I paid for, frankly. And I spent a lot of time then and a lot of money, like my master's degree wasn't cheap, like, 40 or 50 grand, whatever it was, educating myself, where had I just hired the right people, 6 or 7 years earlier, I could have leveraged off their experience, their time, their money, to have gotten their advice and followed their ideas.
Welcome to Get Invested on the Property Hub podcast channel, the leading weekly show for Australians who want to learn how to unlock their full self, health and wealth potential. I'm your host, Bushy Martin, and each week I go deep with the best investors, experts, leaders and founders to find out what it takes to break free from the grind, discover freedom and to live by design. Subscribe now and join me and get invested in the life that you really want. Let's get started.
Hi, freedom fighters. Are you better off being a generalist or a specialist in life, work and property? Let's explore this because, as always, the answer is that it depends. And it may be more of an and response than an or decision. Because generalists often enjoy a better overall awareness and understanding with increased potential versatility, diversity, adaptability and flexibility where risk can be spread, but it's likely to require more time and effort to become and stay informed across the broader spectrum, and overall rewards and returns may be lower as you miss out on opportunities that are specific to a particular niche. Specialists, on the other hand, enjoy in-depth expertise in a particular niche or chosen area, allowing for more informed decision-making and a competitive edge by becoming an expert, leading to high potential returns as you can potentially identify and capitalise on unique opportunities as you focus on the specifics. However, concentration can require more in-depth research to stay up to date on local developments and trends, and it can make things more vulnerable to fluctuations in your specific location, leading to high potential risks if the chosen niche performs poorly for a period. So which side of the fence are you better sitting on, the generalist or a specialist? Well, ultimately, the best approach depends on your individual circumstances in terms of your goals, timeline, knowledge, capacity, risk appetite, and personal time availability. But it's also important to recognise that this is likely to change and evolve over time. So it's not static. It may end up being more of a transitioning spectrum. So whether it's life, your work, or your property investment, I suggest you adopt a changing hybrid that incorporates the best of both the generalist and the specialist realms. Let me explain. Whenever you start something new, you need to begin as a generalist as you absorb and then learn as much knowledge as you can, as quick as you can about the subject, so that you get a broad sense of the underlying principles and how the overall jigsaw fits together. And then you're able to deep dive specialise into the area or niche that promises the best opportunity while leveraging the best fit with your past experience and best matches your interest, outlook, expectations, capacity, time availability, and your sleep at night factor. In this way, you can employ what I like to call a T-shaped hybrid approach, where you have broad understanding of a subject at the horizontal top of the capital T, combined with deep specialist knowledge in an area represented by the vertical leg of the capital letter T, in order to enjoy the best of both worlds. Because starting general and staying general is likely to lead to what I call diversification instead of diversification, as average returns spread too thinly may avoid risk, but may also limit performance. So an element of specialisation may improve your odds. And if you doubt me, just ask Warren Buffett, who once famously said that diversification is protection against ignorance. It makes little sense if you know what you're doing, which highlights that diversification is a good strategy for investors who really don't understand what they're investing in, but not for those who have a strong understanding and can make better informed decisions. In property investment terms, this means investing first in gaining broad knowledge and understanding of property investment fundamentals and principles on how it all works, so that you can outline your own long-term investment GPS strategy before you specialise in a property type and location at your achievable and affordable price point, in order to achieve superior performance and results over your investment horizon. For most investors in the initial accumulation phase, this means focusing initially on residential property in order to optimise equity growth from a low base. that often results in leveraging into 3 to 4 bedroom homes in tightly held areas at your achievable price point that are in the sweet spot of demand and are likely to experience superior growth from gentrification and or new infrastructure, industry and income escalation, as opposed to lower growth cheap units and apartments. After you've secured a growth property in your specialist location, you can then adopt this approach across a number of states to build in general portfolio diversification and limit land tax impacts. Then, once your portfolio is projected to meet or exceed the size of your required income-producing nest egg that's needed to fund your lifestyle, and or you're needing to transition, rationalise or convert your high-growth, low-yield assets into maximum tax-effective cash flow income at the point when you've accumulated significant equity and bigger capacity, and or you want to stop or reduce your active work, then the focus needs to shift to higher yielding properties like commercial properties or units and apartments and or other high yielding assets depending on your capacity. So it's about going for growth and then converting to cash flow as you adopt an evolving generalist to generalist approach, as I discuss in detail in my book, The Freedom Formula. Now, I need to stress that I'm talking generally here because I'm not an accountant or financial planner. So what I'm sharing is just for general information purposes based on my personal experience and doesn't constitute financial advice. But distinctions between a generalist and specialist approach also apply to the property you buy and the team you engage to support you in making it happen. In terms of property type, when we're talking residential during your initial growth accumulation phase, don't fall for the trap of focusing just on securing investment-grade property, because that's a form of generalist approach that many property players and commentators like to talk about. Why? Because a location and property may tick all of the so-called investment data science boxes driven by head logic, but superior value growth in property is achieved when the intangible, emotionally driven aspects of the art of property are fully engaged. And this is much easier to achieve in property than any other asset class, because unlike other investments that offer very similar commodities and everyone has access to the same information, in property, every property in every street and every suburb is different and unique to every other one of the 11 million odd properties spread across about 15,000 different areas. And this specialist uniqueness is where you have a much bigger opportunity to create and manufacture value growth if you can tap into buyers' emotions and provide a unique property that everyone wants, because it's scarcity that really drives value. So what do I mean by this? Well, you need to buy with your head so that you can sell in the future to someone else's heart. Let me explain. When you buy a property, it needs to satisfy the general baseline investment parameters and numbers. But when you sell a property at the other end of your journey to convert your growth to cash flow, you don't just want to sell to another of the 30% of limited investors who are buying logically with their heads in their spreadsheets. You need to be selling to the 70% of owner-occupiers who buy more on emotion and can be less price sensitive. So presenting a property that they fall in love with and just have to have through its street appeal and owner-occupier appeal will allow you to slipstream on FOMO to produce much higher capital gains. And you have the unique power and creativity to manufacture this with property, where you can buy someone's problems and then transform them to create someone else's solutions. So don't be an investment-grade generalist, become an owner-occupier appeal specialist to optimize your outcomes. As an example of the value benefits of quality and emotional appeal over straight generalist rational logic, one of the first basic properties that we bought for about 84 grand in good old Aldinga Beach that I've mentioned here on the podcast a couple of times has been renovated over the years from a basic pig's ear into a high appeal silk purse that's currently bank valued between 1.4 to 1.5 mil, compared to recent sales averaging just 950 grand for the same property profile in the area, which equates to a 50% specialist quality bonus. So the quality of creating specialised emotional appeal trumps the average general run-of-the-mill every time, because the average property buyer has no imagination other than what they can see. So you just need to give them exactly what they really want. And appeal quality specialisation is what's going to get you there. Now, if this has sparked your interest and you want to know more on how this can all work for you, feel free to tap into our recent release Freedom Formula program or book in with me for a personal solution session by clicking the links in the show notes. Now, a similar argument applies to the property team that you engage to build your portfolio, because property is an elite team sport, and the quality of your network will create the quality and quantity of your net wealth. So instead of adopting a lowest cost-based generalist approach, I strongly suggest you pursue a value-based specialist approach to everyone in your property team. From your property strategist to your broker to your accountant to your buyer's agent, property manager, absolutely everyone needs to be an expert specialist in their field, not a generalist, if you're really serious about achieving superior property results. As Reddit there once famously quoted, if you think it's expensive to hire a professional to do the job, wait until you hire an amateur. So don't get the cheapest generalist accountant who say they can do everything, because an accountant who does your tax return but doesn't invest in property themselves just doesn't know the nuances of the multitude of tax rulings that are associated with property that can have a massive impact on your property's true cost, affordability, and performance. Similarly, don't just engage a free generalist lowest rate loan broker to do your loans, as it's likely to end up costing you hundreds of thousands of dollars more long term compared to an investment savvy broking specialist like our know-how property team, who create a specialised unique financing strategy and loan structure that can increase your investment capacity and purchase price power by 50% while minimising your costs and your risk, because property is definitely a game of finance. Now, this specialist approach applies to all of your property and your professional team, because in my experience, anyone who says that they can do everything for anyone generally ends up doing next to nothing for no one very well. And make sure that you don't fall into the trap of engaging a generalist one-stop shop operator who tells you that they can do everything in-house for you, because there are no robust discussions or checks and balances and differences of opinion in this setup, which is essential to your property protection and your education. So make sure you engage a completely independent team of professional specialists who are the best of the best in their separate roles and who can keep each other honest and protect you better by ensuring that you're fully aware of the pros and cons of all your options, so that you're making fully informed decisions that are in your best interests, not someone else's. You just need to project manage that independent team and or have one of your property specialists do that for you. And I guarantee you'll enjoy far superior property results. And someone who clearly understands the benefits of niche specialisation within a general field is today's guest, Simon Borham. While Simon's business falls into the generalist category of commercial buyers agents, as you're about to hear, his high-level, big corporate background and superior specialist project management skills enables him and his Eastview Advisory team to create and deliver commercial property outcomes that are way over and above the average general operator in the buyer's agency space. So this week, we're going to unpack his personal journey, while next week, we'll deep dive into his specialisation in commercial property project management and what this means for you. So welcome, and let's get invested, Simon.
Great, Bushy. Thanks for having me.
Mate, been looking forward to this. I've have been doing a fair bit of Google stalking of you in recent times, mate, to get a better sense of what you do and how you do it. But I guess just to kick things off on a light level, what's a bit of a funny story that you or others tell about yourself that you think best sums up who you are?
Mate, I think my wife would want me to disclose that I'm, I guess, a serial offender when it comes to hobbies. And I've tried just about any hobby you could probably think of. And she gets very displeased every time I come home with a new bike or guitar or some other gadget that's the flavour of the month this month.
You sound like someone who has a very active mind, who's always looking for something new and exciting, mate. Would I be right in saying that?
Yeah, that's you've got me in one.
But sort of shifting into what you're now doing and whatnot, can you also give us an initial flavour on what you do differently and why you do what you do, please, mate?
Yeah, I think the reason I do what I do is, I think, well, the Japanese have got this really nice saying called Ikigai, which is find something you love, find something you're good at, something the world needs, and something you can get paid to do. And for me, property's always been, I guess, that for me. It's what I spend my day doing now and have done for many years. And when I get home, I find myself just slipping back into, looking at more things or reading other articles. So it really is a passion of mine. The buyer's agency and what drives that is probably from my own experience early on. Like I've worked in property for my whole career, coming up to 15 years now. But when I first started out and I bought my first house, I actually used a buyer's agent, and I got terrible advice. I bought an awful property in the wrong area that didn't grow for about 5 years. And that really held me back on my investing journey, because I was covering the mortgage on that and not, able to release equity or cash flow to buy my next property. And seeing too many people in the industry like that gives me, is a real drive to make sure that we're representing the industry right and doing the right thing by people.
Yeah, and I love that, mate. Well, let's circle back to as far back as you want to go, really, and give us a little bit of a flavour on where you've invested your time and energy, money over the years, and how has that all led you to where you are and what you're doing now?
Yeah, so I started a business. So I did a business degree with the University of Wollongong, and I started around 2010, and got a role. Was really fortunate actually to get a role in a graduate program for a company called Unilever. And as part of that, I went into the supply chain team, and they just gave the grad all the jobs that no one else wanted to do. One of those fortuitously was all of our industrial leases had come up for renewal in that year. And so pretty quickly, I was an inexperienced grad negotiating $2 to $3 million a year leases on $65 million buildings, which was well and truly above my pay grade, but gave me an incredible flavour for the industry, I guess, and a real love for commercial property very quickly. And that ended up being a bit of my niche at Unilever. I did that in Australia. I moved to New Zealand and did it, renegotiated industrial supply chain there. And then I moved to Singapore and did a similar job for the Southeast Asian business. So sort of fell into property, but I guess really loved it from quite quickly. When I moved back from Singapore to Australia, I did a master's degree in property development. And I ended up moving over to Aldi, the supermarket, to buy, build, and lease stores on their behalf.
Yeah, well, that's. Perhaps just share a little bit more detail on that, because just so that people get their heads around the scale and the compressed timeframes associated with some of that. That is a massive task. So I'd love for you to, put a bit of shape around it for us.
Yeah, sure. So if we look at the Aldi experience, I guess one of the things that we would look for when I joined the business in 2015, it was growing rapidly. We were looking to open sort of somewhere between 50 and 70 stores a year across the country. And so you need to identify an area or a location or population that will support a new store. Once you've found that area, then you need to say, well, where are people going to go shopping in that area, and identify your target properties. You then need to go and acquire them. So sometimes they're not for sale, and you need to try and make them for sale by speaking directly with the owners or the agents to, be a bit creative. Either negotiate to buy or lease the piece of land or the building, and then design and construct a store. And as you mentioned, you're doing that at pace. So it requires really good data and really good insights. It requires a really, really good team. And I think some really good processes in knowing what to look for and making sure that you're not going down too many rabbit holes that have got dead ends at the end of them.
Yeah, no, spot on. You're sort of sounding like someone who loves to dive in the deep end with your floaty slash and then chew like hell and swim like make it happen to increase your knowledge. Would I be close to the mark there or not?
Yeah, it's spot on. I think one of the projects I did at Aldi was a refurbishment project where we went around all the stores in the country and changed them from this horrible sort of yellow tile store to a nice sort of modern industrial fit out. We were doing 100 stores a year, so 2 stores a week. You're talking about, $2 to $3 million a project, starting 2 a week with a team of 15 located in Sydney. We were, you put your back to the wall and it's amazing what you can do.
Yeah, love that. You sound like someone who doesn't have too many fears, but what, if anything, is your biggest fear, and how do you manage that, mate?
Well, my fears have changed as I've gotten older. I've got 3 young kids now, and my biggest fear at the moment is, and I think probably because of some of the experience that I've had in corporate, I've had the benefit of working with and knowing a lot of, very successful people and very successful parents. And the most common piece of advice that I've had from anyone that's had the benefit of a good career and a loving family is that they always regret not spending enough time with their family.
Yep.
And so my biggest fear at the moment is that, that I have that regret when I get older, and I'm building, I guess, my life, my businesses around making sure that, we can add value, we can, generate wealth, but not at all costs.
Yeah, that's a lesson that took me a long time to learn, mate. I burnt my first marriage as a consequence of chasing the career, and learned some pretty hard lessons early on in the piece that set me on a different path. But I guess on a similar front then, Simon, what challenging event in your life so far do you think has brought about your greatest learnings and some of your best changes?
Oh, it's a good question. I think it probably links back to when I was at Aldi. One of the roles that I did there was I got seconded into the role of the Director of Health and Safety.
Yep.
I got that job in November 2019. And I'm sure that people listening will think back to what happened in December of 2019 and the subsequent lockdowns. And I can assure you it was not an enjoyable time to be the head of work health and safety at a national retailer. And basically for that probably next 18 months was when we had a 6-month-old when that happened. And by the time basically lockdowns and everything were finished, we had a 2-year-old and another 6-month-old. And my son used to call me mum because I'd worked so much he didn't know who I was.
Wow.
And I was chained to the desk 7 days a week for weeks at a time, trying to get through that. Every new press conference was a new set of rules that we had to adhere to, and every state was popping off. It became my problem. And that was I think it was a good lesson to get early because, sort of, as you mentioned, you've had a similar, you've had that experience, and I've had the benefit of, I guess, hearing from people like yourself and others that have had that experience and wish they did things differently. And I thought, I'm at the point where I need to make a decision. Otherwise, that might be me too.
Yeah, it's pretty good. And that's how Eastview Advisory came about. Am I joining the dots there?
Yeah, exactly right. Yeah. So halfway, I think, like at the end of that COVID period, we just decided that to get that control and that time back, because I needed to go out and work for myself or start a business. So spent a bit of time working, the dual role, the 9 to 5 and then the 5 to 9 to get everything set up. And once we were sort of ready to launch, we had a couple of dollars in the bank to get us through, the sort of 6-12 month ramp up period that we we're going to need to build the business. And as soon as we were ready, I just jumped ship.
Yeah. And again, reading your background, the old LinkedIn special, it looks like you were probably able to leverage off some of those relationships with Aldi and Unilever to roll out some of their program under the Eastview Advisory banner. Would that be because I love that you're doing that, because the most difficult part of establishing any business is the cash flow over the first 2 years. That's generally what cripples most of them. Was that sort of able to enable you to transition a bit more smoothly into your own space?
Certainly the contacts. And I used to say this when I was at Aldi, was that it's almost detrimental to know someone at Aldi because they're very strict on conflicts of interest.
Yeah. Right.
And having been a previous employee, it was actually a bit of a barrier to get back in as a service provider. So, but the contacts and the people that I know from there, and I think also having the experience, being able to walk into a meeting and saying, well, I've got a master's degree in property development. I used to do this for one of the largest companies in Australia, and now I want to do it for you. Helped with certainly with the initial credibility while I was getting runs on the board. And now, fortunately, I think after a couple of years, Eastview's done enough that we can sort of stand on our own 2 feet and we can point back to the projects that we've delivered or the acquisitions that we've made as Eastview and on behalf of some of our clients. So we've been fortunate to work for some amazing clients.
Yeah, awesome, mate. Love that. And then we'll dive a bit more into that into next week's show. But I sort of circling back to yourself, what, if anything, do you struggle with, Simon?
Oh, it's a good question. The thing for me is time and getting time for everything in life. Wanting to make sure that you're a great husband, a great father, and, a great consultant, a good business person, that I'm not, that I'm keeping myself fit and healthy enough to hang around for a long time. And just trying to get the balance between all those areas of life. And I think that's becoming more common. It's something that I hear it from a lot of people, across sort of all walks of life, is trying to get the balance right. And that's really something, particularly being a bit of a workaholic, that, the minute the kids are in bed, it's hard to resist turning the laptop back on and having, just sort of making sure you're on top of everything and everything's going the way you want it to.
Yeah, I think it's a never-ending problem, mate. I'm a fair bit older than you, and it's still a challenge. So I think when you've got that sort of personality that really wants to move the needle on things, then yes, having a good partner certainly helps. But because they can tell us things that we can't see in ourselves. But I think it's a bit of a lifetime challenge, and something that a lot of us have to focus on, mate. But I want to sort of jump now into your own personal property journey, if we can, and get you to take us through the nitty-gritties of what you've done, what you did and why, what challenges you've overcome, what's worked and what hasn't, and what have been the learnings of all of that, if you can put some shape around all of that for us.
Yeah, for sure. The first property is probably not going to paint too well in painting me a good picture, but my first property, I was 24. I'd saved up 25 or 30 grand deposit, whatever it was. I utilised the first home buyer scheme, and I used a buyer's agent, and I was advised at the time, it was about 2014 or something, to buy a property in Brisbane. And if anybody has bought a property in Brisbane between 2014 and 2019, you will share my disappointment in the fact, I think I bought that house as a 4-bedroom, 2-bathroom property on 400 square meters off the plan for 385 grand.
Yeah.
And the next part's the cruel part, is that I sold it in 2020, the start of COVID, for about $5,000 less than I paid for it 5 years earlier.
Ouch. 5 years later, it would have doubled in value, mate.
Correct. Yeah. I actually, anyone that bought a property in Narangba or knows the Narangba market, I haven't checked the property market up there since I sold the house, because I don't want to know. And it was a classic of, I bought the wrong house at the wrong time in the wrong place. I held on to it for too long, and then I sold it too early.
But it sounds like you were led down that path by a bit of a property Pied Piper that was telling you all the wrong stuff. Am I right?
Yeah, and I've got to take some personal responsibility that I chose that person, but I didn't do enough background checks. And had I done the background checks, I would have found out that the person was a marketing and sales background, and they were incredible at marketing and selling the property. They also had some conflicts of interest that were undisclosed, that the land that I bought was owned by his uncle, and the person who built it was owned by the building company was owned by his dad. Just basically everything that could have went wrong went wrong. And it basically left me in a position where, I wasn't a high income earner. Like, at that point I was a graduate, I might've been earning 70 grand a year or 80 grand a year.
Yeah.
And because it was negatively geared with the interest rates the way they were and the rent that it was, all my savings was just going to topping up the mortgage. And, for the period of time that I held the house, it was incredibly difficult to save, and I wasn't getting the equity growth. So I was basically just stagnant for 5 years, and it kept me out of the market.
Wow, there's some good learnings there, but I'm guessing that the next step from there has gone better. Can you sort of walk us through what happened from that point?
Yeah, from that point, it was around 2018. I was just really getting jack of it, and just thought, I need to think about this a little bit differently. Like, I can't just keep crossing my fingers and my toes that this thing's going to go up in value, and I can use that equity to go and buy another property. So I thought, I'm going to have to take matters into my own hands here, and that's when I really started looking into property development. It was when I started doing my master's degree. I thought, if I'm going to do it, I'm going to learn about it. So I went to UTS. They've got a really good master's program for property development. And I actually, at the time, one of my best mates, his mum was, she was getting on a bit, and she had her house sort of falling down around her, but she lived on a big block. And I went and had a look at it with him and said, look, I think we could subdivide this, and, we could build your mum a brand new house, and, we'd be able to sell what's there and cover the costs and make a bit of a profit.
Yep.
And so that's what we did. We ended up, we signed a joint venture agreement. I managed the whole project. Design through to construction and delivery. My mate funded it, and his mum signed the paperwork to let us put a mortgage on the house. So lots and lots of trust involved. But we did that, and it was an amazing project. My mate's mum got a brand new house out of it that she never would have been able to afford. We subdivided it and sold off the original dwelling. We made about $70,000 each. And then that was a real kickstart into starting to get me into the next lot of projects.
Yeah, I love it. The very different style and approach from the first one. And as you've said, you're really controlling your own destiny by manufacturing the growth rather than hitting and hoping, essentially, is what I'm hearing.
Yeah.
Where did it go from there, mate?
Yeah, so this is where I guess my approach to property will become quite clear, is that I like to take matters into my own hands.
Yeah.
And so basically what we did from there, I thought, well, this has worked out quite well. And at that point I got married, and we decided to buy a house. But I basically created the philosophy that I'll never buy anything that I can't control the value add to again. So my next property was a house in Sydney that was actually in an old housing commission area that they were selling off. And so we bought that quite undervalued. We did about $130,000 worth of cosmetic reno to that, which we used all the money I got from the first project as the deposit, got a bank loan for the rest to do the renovation.
Yep.
There's a personal loan, so really high interest, pretty high risk. And we did pretty well out of that. The market admittedly did some heavy lifting for us between 2018 when we bought it and 2021 when we sold it, but we made about $600,000 in profit on that project.
Nice.
And because we lived in it, it was capital gains tax exempt. So that was a really tidy sum to get put in the bank. We then did it again. So we bought our next principal place of residence, which is a 5-bedroom, 300 square meter home in Newcastle. We moved to Newcastle.
Yep.
We bought that for $950,000. We spent about $250 on it. And if I sold it today, we'd probably get somewhere between 1.8 and 1.9 million for it. And again, that's tax free as well, because we've lived there the whole time. So
yep.
that really was what that first project was what really set the course, to making, ended up being around 1.2 million in capital gains, tax-free gains in about 4 years. And that's been the platform that we've been able to spring off. So we've still got that house. We love that house. The office that I'm in now, we bought this office last year.
Yep.
So that this office houses Eastview, and also my wife's business. We bought it. No surprise, we renovated it. We split it up into 2 units.
Yeah.
And we get about a 12% yield out of this. We probably made another $300,000 in equity in the office.
Yeah.
And then the most significant property was one that we acquired in October last year, which is a 50-acre, so it's about 200,000 square meter farm.
Oh yeah.
Up in the Hunter Valley.
Yep.
Which is surrounded by residential properties, but still zoned as a farm. So that was 3.2 million, and we've got that on a sort of extended settlement over 3 years. And the aim is that we'll rezone that and we'll subdivide it into about somewhere between 25 and 35 large lot, like acreage lifestyle properties.
Yep.
We'll sell those off as blocks of land.
Love it. I'm loving what I'm hearing is that sort of creative property development come project management skill that you've been honing and improving over time is that you're sort of leveraging that and using the success of the last property to then turbocharge the next one, which, that ability to manufacture and control that exercise is a skill set all of its own. Most people don't have the skills or the time to make that happen. By combining that within your business, then you've got a launch pad there that can do it for yourself, but also do it for others, which I think's which is awesome. If we jump forward now, then Simon, into the perfect world, because I'm a big believer in living by design, not by default. Can you paint us a bit of a picture of what your ideal lifestyle is going to look like when money is no longer an issue?
Yeah, I think the really important thing for me is trying to get that balance. I think one of my favorite sayings is about focus. So a person who chases two rabbits catches neither. And so, like, at the moment, I think my focus is on the business, and it needs to be to get it growing, and getting it to a point where it sustains us, and we're we've built some wealth, and then we're able to do that for other people. Yeah. Once we're there, it will really become a bit more about balance. I love working, and you can only sit on a beach for so long. So I want to make sure that I've got the time to go and sit on the beach when I choose to, and can sit on the beach with the people that mean the most to me, or my wife and my children. I want to make sure that I'm still working and adding value, and I've got a purpose in life, and I want to make sure that I'm looking after myself. So what that really looks like is, I think I'm fortunate with my job that a lot of it can be done with the technology that we have now. So I'd like to spend as much time as possible in the next 10 years in our caravan, traveling around the country, seeing cool things, experiencing cool things, and still being able to work and contribute.
Yeah, I love that. So you're sort of the developed strategy that you've got, which is buy, develop, and then either hold or sell, or a combination of both. You see that changing moving forward to achieve that ideal lifestyle, or how does that look?
Yeah, I think so. Like, it's obviously risky. I guess the type of projects that I take on now, I think as I get older and as I accumulate some more wealth, that my appetite for risk will change, and it'll change from an accumulation of wealth to a protection of wealth type strategy. Yep. And that's where, something that you mentioned in the intro is, how your investing changes as you get older and your priorities change. I'll be looking to park a lot of money in A-grade commercial assets with ASX listed national tenants on long leases, yeah. And benefit from that really strong income.
Yeah, I love it. If you sort of sum up your journey so far and what you've seen others do, with either working with them directly or otherwise, but what do you believe are the sort of keys to successful property investment, and why then, Simon?
Look, really, really basic. I think doing something is such a good piece of advice. And it's a lot of the time when I'm talking to clients is, I can't always quantify how I'm going to add value, but I always can. And it's generally in three different areas. It's either getting you to do something when you otherwise wouldn't have.
Yep.
Telling you not to do something that's about to cost you money. Or, finding and negotiating a really good property. But I think, like, a lot of people get stuck in that analysis paralysis where I want to do something, I don't know what. What about this? What about that? And 5 years later, they've done nothing. And so, I think sometimes the best advice is just do something. Yeah. And you're going to learn along the way. Like, I guess my first property was awful, and it was a bad investment for probably every reason it could have been. But if I hadn't had that, I wouldn't have thought differently, and that wouldn't have set me up to do the next, 5, 6, 7 projects that we've done personally successfully. Yeah. And it wouldn't have given me the ability to have the business that I've got where I can help people do those things as well.
Yeah, I love that. That very sage advice, because, and I think not only should people do something, because time does a lot of heavy lifting in the property sphere in particular, but you are learning. And I think the other important thing I can take from your personal experience is that, a lot of people after that experience in the first property in Queensland would have packed up their ball and bat and walked away from property and never come back to it.
Yeah.
What I like about yourself is you've gone, no, let's have a look at this. What have I learned from this? What am I not going to do next time? What am I going to do differently that's going to give me a best result? I think that combination is something from, your own, what you've been able to do is a bit of an example for other people to follow. So love that. If we look back on your journey so far then, mate, if you were starting out again, what, if anything, would you invest your time, energy, money in differently?
Look, I I always think the best thing, a saying I live by, because it stung me so many times early on, is poor people pay twice. I was always looking for the cheapest way to get what I wanted.
Yeah.
And I paid a cheap buyer's agent to give me terrible advice, and I got what I paid for, frankly. And I spent a lot of time then and a lot of money, like my master's degree wasn't cheap, like, 40 or 50 grand, whatever it was, educating myself, where had I just hired the right people, 6 or 7 years earlier, I could have leveraged off their experience, their time, their money, to have gotten their advice and followed their ideas. So yeah, I think you've got to invest in yourself, and you need to get, another one of the things you were talking about in the intro is around that generalist to specialist. You need to educate yourself so you know what what you don't know, and how to bring people on that can help you. And you certainly have to look at the value of things over the price, because you can get stung way too easily trying to find the cheap way out.
Yeah, beautifully said. I love that expression, poor people pay twice. So that's that sums it up very neatly, I think. But we've only just touched and scratched the surface, but we're going to get into the nuts and bolts of commercial property in a lot more detail in next week's episode. But what I'm going to do now, mate, is give you the old blindfold and a cigarette and hit you up with the fast 4 questions that you get machine gun with just about every podcast you appear on. So first of all, if you could have a coffee with anyone, whether they be alive or a dead historical figure or anyone you choose, who would you choose and why?
This might sound like a bit of an obscure one, but Craig Bellamy from the Melbourne Storm is the coach of the Melbourne Storm NRL team, and the reason I'd love to have a coffee with him is probably 2 things. One, most coaches is an absolute merry-go-round, and you're an absolute glutton for punishment. I think if you want to become one, 3 or 4 of them get sacked every year.
Worst job in the world, I reckon.
Has to be. It has to be.
Yeah.
He's been the head coach of the Melbourne Storm for 20 years straight, and has got an incredible record with winning. And I just think somebody that's done that level of excellence for that long must know something that other people don't. And I'd just love to hear what it is. I think he'd be a wonderful leader. He'd be a very people orientated person, and I think he'd have a lot of lessons to teach that I could learn from him.
That's an awesome pick. No one's mentioned him before, but just listening to what you've said, I'm going, yeah, absolutely. He'd be a cracking person to sit down and spend some time with. Love that one. Back on the investment sphere for a second then, Simon, what's both the worst and the best investment advice that you've ever received?
It depends who you talk to. So some people have told me not to take risks, and other people have told me to take risks. And therein is the best and worst advice I've ever heard. Not taking risk is a risk. Because if you don't do something, there's an outcome there too. And so you may as well, there's a great quote by Jim Carrey that he gives an ending speech at a university, and he says, you can fail at what you don't want, so you may as well have a crack at what you do. And so he talks about his dad never wanted to be an accountant, but he did it because it was safe, and he ended up getting fired from his accounting job. And so, I think not taking risk is really bad advice, and taking, structured, managed, well thought through risks, is really, really good advice.
Yeah, and I think you've just hit on it there. When you know what you're doing, it's no longer a risk. It's a calculated opportunity that may have an upside or downside, but that's very different from a risk that you don't really know what's coming and you don't know what's going to happen, what you're going to do about it. So, no, that's beautifully said. Completely different subject. What superpower do you wish that you had and why?
Mate, I would love to be able to read people's minds. I negotiate for a living, right? And I was at an auction last week, and the property was about to be passed in, and they're telling you all these things, and you just think, I would love to just know the truth. I would love to see what's going on beneath the covers. I think it'd really help with my job. I think it'd be a pretty cool power to have.
It'd be an awesome power to have, and you'd probably get a bit of a surprise and shock of what people are really thinking on what they're saying too, I would imagine.
Well, I'd want to be able to turn it off. Yeah, can I add that on it? I want to be able to use it selectively.
Last one, and because I'm a big believer in regular habits and discipline to achieve sustainable success over time. So what's a personal habit that you employ that you think's contributed most to your success today?
The best one that I do at the moment is guaranteed family time, I call it. So I do have the flexibility to work to my own schedule largely at the moment, which has been great. And so I always make sure I never miss a dinner is my rule. I'm home at 5 o'clock. The laptop is closed. The phone is on silent in the bedroom, and I spend 2 hours with my kids every day. Yep. Because that for me, it's really important time for them. It's really important time for me to be able to connect. And anything else can wait outside of that.
No, that's love a thought on that. Last question for the chat this week. In terms of where and what you've invested your time, energy, money in so far, what's the most important lesson and takeaway you've learned in your life today?
Good question. The most important lesson is, I think, to trust yourself. I've had, even when I decided to leave Aldi, like a lot of people in my life were like, really? You've got a good job. You've been there, 8-10 years, whatever it was. You're living really comfortably. You're not wanting for anything. Why do you want to mess that up? And it was more people told me not to than told me to. But I sort of knew in my gut what was right. And so far so good. It's not to say it's not going to continue that way, but I've certainly had opportunities that I wouldn't have had I played the safe game. So I think trust your gut and back yourself.
Yeah, and I think what has become evident in our chat today, Simon, is that you're able to pivot. You're pretty flexible and adaptable, and you're quite creative. So I think you're the sort of person who can get thrown into a situation and be able to work out what you need to do and make it happen. That's a rare skill, to be quite honest, because there's a level of resilience and self-belief there that I think would carry you. And the fact that you've achieved such big results in Eastview Advisory in such a short space of time pretty much speaks volumes to that. So look, really want to thank you for taking the time to share your growth and personal journey so far. Before we go, if anyone listening would like to keep the conversation going in a very safe and open forum where you can take your property knowledge to the next level by sharing and learning with other like-minded property investors and property professionals so you can get all of your property questions answered, join Eddie the Frenchman, myself and a host of others now on the Property Hub Collective Facebook page by clicking the link in the show notes. We now look forward to continuing our conversation with Simon in next week's episode, where we're going to unpack his unique commercial property secrets and development opportunities. So remember to always get invested in your knowledge and your network before you invest in assets. And we look forward to getting invested with you again then, Simon.
Thanks, Bushy.
Thanks for tuning in to Get Invested on the Property Hub podcast channel, your home for property investment insights and inspiration. Make sure you subscribe to Property Hub for free. Get your weekly dose of Get Invested inspiration along with every episode of Realty Talk, Australia's top online property show for red-hot property investing news and insights direct from industry leaders and influencers. And finally, I'll see you next time.